Hello everybody, welcome to today's video and silver technical analysis. Only one chart today, which will be the one you're looking at, the weekly term time frame, and it's the 19th day of March on a Tuesday. Alright, so this high, which was placed at the end of April 2010, well, it'll be the last time you're going to be able to see this on the charts, and well, 2 weeks from now, the price scaling will probably be adjusted to around 45 to 46 as the highest level, rather 56. With that being said, however, I want to talk about right now higher highs, lower highs, matching highs, same with the lows. We'll draw them in right now. All of the lines that I'm showing are where the highs and lows were in place. So, this high being highs not seen since 1980 was a higher high, and it was a matching high from 1980. This low was a higher low from the lows that was placed not seen on this chart. Obviously, from this high, this was lower. This low lower than this one. This high lower than that one. This low matched that one. Now, technically, this high was higher than this, but in my book, it's a matching high. Another matching low, another matching high. Now, this still has the potential to microscopically make a higher low or barely make that of a higher low, but it's still unclear whether this low is going to be the low within the run of highs and lows that I am showing. Within the trend since the last high, we can do the lines again. There's this here, and we'll draw them all in. So this low was higher than this one. This high lower, 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 and lower again. You can also draw a trend channel, which we will do right now. Draw a trend line that connects these three low peaks. There we have it there, and draw a parallel line, which means we will use the exact same rate of a descent and put her on the resistance level. So that's what we're seeing right now. This is the downtrend. Whenever you have a situation where support, the bottom line in a downtrend level like this, is taken out, then that is a possible spark for a massive increase in volatility, which has been extremely microscopically small the last year. Let's take a look at why. Well, we have numbers here. Volatility 1.71% for the week, and it's only about 25%, 30% of the way through this week. So a lot more time can increase the volatility, and Ben Bernanke is going to be speaking, which, when that happens, is usually always an increase of volatility. So normally you have silver days where the price would move about 3%. Lately, it's been about 1.5%, so maybe it might break well over 2% tomorrow, as, of course, volatility has been extremely tiny. You got this whole sideways nonsense, not doing so much. But when we look at the size of the moves, the average over the last 100 periods is 7.84%. Let's look at these numbers a little bit more in depth. Since last year, March 17, 2012, this is the 52nd week since then, so a full year. These are the weeks that have been higher than the average. So with the average of the last 100, which mostly includes the period we're showing, only 4, the week ending December 21st of last year, August 24th, June 22nd, and of May the 18th were the only ones that contained volatility higher than that. Only one was greater than 10%. So the movements that we are encountering are really hardly anything at all. And in the last year itself, 5.15% has been the volatility. Now, what is volatility? Well, what it is, you take the highest level, subtract the lowest level, which gives you the difference in price for the period, and then you divide it by the lowest level again to obtain the volatility level. at the end of, in 2 weeks from now, when this period here is gone, these numbers you're going to start to really see take a major decline on the last 100 volatility average, to say the least. Now, when volatility gets really, really tiny, it really says that moves are done, nothing to be seen here. Everything that was done in the past, the volatility, everything's been straightened out, which to me is not the case. Or it is the calm before the storm, and I'm going to define storm as next significant moves, whether it be up or down moves. And that to me seems like the most logical sense. After all, we're seeing a situation in here where the volume in the futures contracts is exploding. The sales of Silver Eagles, Canadian Maples are really exceeding as well. That we're noticing the disconnect issues coming into play. Now, I didn't think that the disconnect issues would really be in a decent force unless we had a significant breakdown below this level, really a break even below 22 3/4 as a major level for that disconnect. Now, it's because enough time has passed, that may be why it's coming into play. I would be extremely surprised if we break below this support level, which is, we'll say 26 even, and hold and stay below it for more than even 24 hours. Although I know it's possible, I would not expect it to be the case. Because I'm seeing high volume, not volatility, but volume, within this microscopically small volatility, within what has been a downtrend, then this tells me that there is a very good likelihood that a bull market, whether it's on low or high volatility, is going to be coming into play. And because it's happening on this low volatility, just doing the sideways nonsense, it could take a decent amount of time before things really start to pick up. Although, again, it could start tomorrow. After all, Ben Bernanke, he's going to say yada, 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 yada. And I'm not going to listen because I don't like to listen to mainstream media. To me, it's just a bunch of stories, stories story. And I can get stories when I go to the bookstore as well. Okay, thank you for tuning in. I wanted to make this about a 3-4 minute video, but I just kept rambling, saying a bunch of stuff, and I'm doing that right now as I now complete this video. Take care.